Kumar sir, Central Council member, respected Chief Guest, our beloved brother CA J. Jalabadi sir, respected FVCO, immediate SARC past chairman CA DC Jain sir, respected Secretary Manimegalai madam, respected management committee members, respected past chairman, senior members, fellow members, and junior members. Good evening to all. We welcome the speaker and all the participants to this meeting. We thank the respected speaker and the chief guest immediately accepting our invitation, even in heavy, hectic corona period, and for being here with us to speak about being sensitive to audit reporting standards for corporates and non-corporates. Thank you, sir. Now, I request Manimegalai madam to introduce. I now request to ex officio to give special address.
Sir, unmute. Sorry.
My unmute was locked actually. Thank you.
And what I saw DC is Kado Tatramar Tatning laptop.
Laptop Tatlang sir action actually. Friends, very happy evening to all of you. In fact, it's a special moment today. We have two important people amidst us. Our beloved SARC chairman, CA Jalapati, and our beloved Central Council member, CA MP Vijay Kumar sir, both who are very close to us and have been contributing a lot in terms to the members, students, and all the stakeholders. So we welcome you to Madurai branch, sir. We would have been happy had you come physically. So we are just eagerly waiting for one such moment whenever it happens actually. Nevertheless, we thought we didn't want to miss out listening to you. So we thought we'll have a virtual meeting. And the idea when we started, we thought we'll have a physical one in mind. If it is not happening, we go for virtual, and God still has not given the full permission for us to open it and have the physical meetings actually. So I know today we have a learned speaker and dignitary. So without taking much time, I would only like to touch upon two things which I've been doing in the past as well. One is, in whatever we do, please exercise professional skepticism. Probably if that is done, all the standards of auditing or the accounting standards, lot of things will automatically get taken care of. Only thing is few reporting or disclosures is the additional thing which we'll have to require. I still recall in one of the cases where there was an innocuous entry known as air climber support for 7 crores. So the auditor thought it must be some aircraft which has been bought, because this I'm referring to the case of Vijay Mallya. But later when they probed deep into it, they found that actually that was a purchase of a race horse actually. So it is always our duty to kind of just go one step further to see what are things behind it, probably the supportives or additional documents which will help us to know what we are doing actually. And second very important thing, documentation. We all do wonderful terms when it comes to audit or the work what we do. But the moment it comes to documentation, we are actually weak. Whereas I will say, even when we compare to the bigger firms, we do a better job. But the only trouble is we spend less time recording things. We spend less time in documentation. Probably I will appeal everybody to see that we take care of that part, to see that we have kind of did things and also noted of what we have did, so that there is no ambiguity later. We have seen that whenever cases in DC come, when they ask for documentation, the auditors struggle to give documentation that they have actually taken care of it. The simplest thing being a checklist for an accounting standard and checklist for standards on auditing. Please have a list, put a tick that you have kind of implemented. That itself will go on to show that you have did your job properly, and tomorrow when it comes to any issues with DC, you can give an explanation that has been taken care of. With these two important points in mind for everybody to adhere to or to take care, I wish you all a very happy learning as we are eager to listen to the dignitaries as well as the speaker today.
Thank you, sir. Now I request the Secretary Manimegalai to introduce the chief guest. Hello, sir.
Happy evening, members. With immense pleasure, I introduce our chief guest, respected chairman of SARC of ICI, CA.K. Jalapati sir. CA.K. Jalapati sir, who hails from a humble background of family of agriculturists in Kollattur, Salem district, qualified as chartered accountant in May 2004, and since then practicing at Coimbatore, As a member of Coimbatore branch of SIRC of ICI, he has been serving the Chartered Accountants Professionals Fraternity of Coimbatore branch since 2007 in various capacities, and he was the chairman of Coimbatore branch for the year 2012-2013. He got elected to the Southern India Regional Council of ICI for the terms 2016 to 19 and 2019 to 22 with highest number of votes in Tamil Nadu. He is leading as chairman of various committees of SIRC of ICI. He was instrumental and closely coordinated with the government of Tamil Nadu for signing of Memorandum of Understanding in the year 2018 between ICI and the government of Tamil Nadu to provide career counseling to students of government schools, which is first of its kind in India. Served as chairman of the Career Counseling Committee of SIRC of ICI, he is conducting in coordination with ICI and the government of Tamil Nadu to create awareness about the CA course with the students studying in government and government-aided schools, covering around 1 lakh students and training over 2,500 teachers. His areas of interest or specialization, his life is by itself an example for the financially challenged students to aim big and realize the goal to pursue higher levels of education and attain higher levels in life. Passion to profession and mission to serve the society attributes his position to the two-letter word CA. His mantra for everyone, and especially for the aspirants to become chartered accountants, is hard work and perseverance to achieve and accomplish in life. With the simple words, I would like to introduce, I welcome CS Jalapati sir to Madurai branch.
Thank you, madam. Now I request the chief guest to give special address.
Thank you. Thank you, sir. Thank you. Thank you. Very respected and honorable Central Council member of ICA, CA MP Vijay Kumar sir, my good friend in this regional council, DC Jain, chairman of Madurai branch, CA Mohan Sundaram sir, and secretary of the branch, CA Mani Magali madam, other managing committee members of Madurai branch, past chairman of Madurai branch, the participants of this evening program. Very good evening to all of you. I am highly elated to join with my professional colleagues this evening and to take part in the lively program on subject of interest and importance, the audit reporting standards for corporates and non-corporates. Our profession has much uniqueness, and one of such uniqueness is the continuing professional education. It is this profession that needs constant updation by its members, as the subjects that have relevance in our rendering professional service are dynamic in nature. Today we have the gracious presence of our beloved Guru, MP Vijay Kumar sir, Central Council member, whose exceptional expertise on the subject would generate new dimension of deliberation and an incisive insight on the requirements in relation to corporate and non-corporates. MP sir is a great speaker and expert in articulation, and also an outstanding teacher. He is an instrumental in the growth of our membership. Yes, his classes are so popular. I am also one of the students of MP sir. I am extremely happy that he is with us today to share his knowledge and wisdom. Today's topics were well chosen by the organizers, and my compliments to the Madurai team. This standard on auditing deals with forming an opinion and reporting on financial statements that has to be followed by all independent auditors to report on the correctness of historical financial statements of the company. It aims at importance of forming an opinion on financial statement, and this responsibility of evaluation on these statements is essence of this standard. In spite of this pandemic effect, SIRC has been successfully conducting innumerable CP program through virtual mode and receiving appreciative feedback from the members across the region. I must compliment the Madurai branch also, which is also showing the proactiveness in conducting various CP programs. SIRC is involved in many CSR activities and exerted the branches to have CSR activities at the branch level also. I should record here that response to our request to the branches were very positive. We could reach out to the common man to help them financially and physically during this pandemic period. SCRC and all the branches of Southern region organized this vaccination camp in association with the respective local authorities and private hospitals. We have also been approaching the members to involve in two of our recent initiatives, maybe the urban afforestation drive and adoption and providing the basic infrastructure facilities in government schools. A few days before, we have appealed to our members to join this great initiatives of SARC. That to the 70th year of a celebration of SARC. I request the chairman to reach out to the members for large participation. I request the chairman of the branch to approach the members to support the novel initiative of SARC, which will go a long way to build a strong and intellectual future generation. Even today, a couple of hours before, we all had a video conferencing session with our CA Dayanesh Sharma, the convener of a group for promoting the financial and tax literacy, ICA, for embarking a national drive for the financial and tax literacy amongst the public. I request you to offer our valuable suggestions and involve in educating the public on the financial and the tax front and the responsibility of every citizen to adhere and honor the statute and the constitution. Efforts are constant and continues in augmenting the financial resources for our CABF. I appeal to the members to contribute you for further augmenting the corpus of CABF. This year, the platinum year of SARC, it is also the diamond jubilee year for I think for Madurai branch, since it formed in the 1962. I request you to take this opportunity to showcase the activities of the institute. It will in the process help in enhancing the image of the institute in the public domain. I am proud to share that year, maybe the 21-22, is therefore an extraordinarily eventful year. I appeal to all of you to participate in all our activities and make the remaining months in the year 21-22 a year of achievement, excellence, and a year to create great memories in SARC. I offer my congratulations and compliments to the members at the helm of affairs of Madurai branch. I wish them a glorious golden jubilee year. Maybe in a couple of days, India is entering into the 75th year of independence on 15th August. On behalf of SARC, I offer Independence Day greetings to all of you. Let us salute the efforts of the freedom fighters and the common man who toiled to secure independence. Let us be part of India scaling newer heights of glory. With this, thank you so much for this great opportunity.
Thank you, sir. Thank you for wonderful comments, sir. Sir, we will do and always support HRC and ECA activities, sir, with a vibrant manner, sir. Thank you, sir. Now I request Secretary Madam to introduce the Central Council member and the speaker, please.
It's my pleasure to introduce Speaker of the Day, CA MP Vijay Kumar, sir, a beloved member of Central Council for the Institute of Chartered Accountants of India for the year 2016-22. A passionate, pragmatic envisioner and a proven executor. Over 27 years of experience in industry and as a chartered accountant in practice. He has been a chairman of Valuation Standards Board and Digital Accounting and Assurance Board in the past, and currently he is the chairman of Accounting Standards Board for the period 2019-21. And he has served as vice chairman of Financial Review Reporting Board and Committee on Accounting Standards for Local Bodies, and currently vice chairman of Expert Advisory Committee. He was a nominee member of SEBI Committee on Disclosures and Accounting Standards, Quality Review Board, National Financial Reporting Authority, and currently a nominee member of SAPA Committee on Accounting Standards. He is a member of Auditing and Assurance Standard Board, Board of Studies, Corporate Laws and Corporate Governance Committee, Ethical Standards Board, Internal Audit Standards Board, International Affairs Committee, Research Committee, Management Committee, and Executive Committee. He is a member of IFRS Advisory Council for the period 2020-23. His work experience, he is a Chief Financial Officer from 2007 till date, and he is a partner of Yoganand and Ram LLP from 1999 to 2007. And he is a head investment banking and company secretary from 1992 to 1999. He is presently holding directorship in XBRL India Limited, CP Singapore Limited, Tejo Engineering Limited, Sella India Software Services Private Limited, and former director of National Internet Exchange of India. He is a resource person he is a beloved resource person for professionals in the topics accounting standards, IFRS, auditing standards, code of ethics, corporate law, governance, and capital markets. And as a teacher, he has 20 years of teaching subject of accounting, financial reporting, and corporate law. We welcome you to Madurai branch, sir.
Thank you, Manimegle. Thanks
Yes,
for
sir.
the detailed introduction. Greetings to all the members. Trust all of you are safe and your near and dear ones are healthy. Special greetings to the first person of the region, Jalapati, first person of the branch, Mohan Sundaram, and immediate past chairman of SIRC, DC Jain, past chairman of the branch, other managing committee members, senior professional colleagues, and all the members present here. So without much ado, let me go straight into the topic. As far as the topic is concerned, on the reporting standards, as Jalapati introduced, and it was very nice to listen to DC Jain explain the importance of qualitative financial statements, the need for checklist and all. It was very heartening to listen to that. Manimegle, is the screen visible?
Yes, sir. Yes, sir.
Okay, fine, great. So over the next 90 minutes, I'll do my best in terms of presenting what I call as the work of the auditor. So ultimately, all of the work which is done, whether corporate or non-corporate audit, the final product is SA 700, 701, 705, and 706. This is the output which all the users rely on. And these standards, my experience is many of them actually look at it as a template for reporting. I just like to highlight two important points here. One is, as far as the audit reports are concerned, over the last 12-13 years, they have gone through a substantial transformation where they are no longer boilerplate or templates. Every audit report now is a speaking report, and the audit report of client A and client B will not be same. And for client A, for current year and previous year is not the same. So Control C, Control V of another report will not work anymore. And I love auditing more over the last 12-13 years, contrast with the period when I did articleship or when I was in practice up to 2007, because those period, we did not have SA 706 and SA 701. These two standards have been truly transformational, where as an auditor, you are required to communicate to the users of your audit opinion, whoever is using your audit opinion for forming an opinion. It could be a bank, it could be a rating agency, it could be a revenue authority, it could be an investor, or it could be in the partners, in a partnership firm. If there are 5 partners, probably 2 partners are actively managing, The remaining 3 partners are passive. They are also reading your audit report to form a view on how things are happening in the firm. So SA 706 has these 2 very important speaking elements. One is emphasis of matter. Matters where you want to draw attention of the reader of audit report that look, take care of this. This is something I want you to specifically look at. And then other matters. So there are things which are not there in the financial statements, but I want you to take note. So that communication comes in SA 706. And SA 701, I will mention now, and maybe about 80 minutes from now, again repeat it. SA 701 on key audit matters is mandatory for listed companies, but for all other entities, unlisted companies, private limited companies, non-corporates, it is recommendatory. So as an auditor, I can choose to voluntarily report key audit matters. And equally important, the client can ask the auditor, please add key audit matters into your audit report. So what key audit matters means is, in the work which has been done by the auditor, he or she believes these are 2, 3, 4 important areas where I have performed some additional procedures and I got convinced in a particular manner. I bring it to the attention of the users. So the reader of an audit report knows that here is an auditor who has done his work and he is telling me further that in the work which he has done, he found these 3, 4, 5 as the most important areas, and the auditor is further telling why he believes it's important area, what are the procedures he has followed, and how he has convinced himself. So which means the user knows that this is how the auditor has worked, and it gives him much greater confidence in financial statements. My sincere request to all the members who are present here is, this standard SA 701, every client, before you finalize your audit report, examine whether you want to use SA 701, and even if there is a slightest reason, please don't hesitate, use it and report SA 701. It actually communicates the work you have done. It reduces your liability in a sense, and it increases the relevance of the audit report to the user as well. So SA 701, please do not dismiss it. Please do not dismiss it as only for listed companies. It is optional for unlisted companies, private limited companies, and non-company entities also. And I would strongly encourage, particularly period of pandemic like this. Let's assume you are doing audit of a partnership firm who's running 5 restaurants. So 5 restaurants, total asset base of 5 to 7 crores. And let's assume he's now incurring a loss because of the pandemic. So you want to highlight this particular restaurant has also borrowed 2 crores from the bank, 3 crores from bank, some money. So as part of the work which you have done, you want to highlight that this particular restaurant, because of pandemic, there is that impairment related issue. Some restaurant might have to be closed down. I may not be able to recover the assets. I want to highlight something. So you are in a better position to communicate. So I would request, please examine 701, every audit situation, and slightest possibility, please use it. The second point I'd like to highlight is, all of us as individuals and as professionals, generally have an interest to communicate. We like to express, we like to tell, we like to express our views. And here is a profession where, just to borrow Rahul Dravid's words, he said that I get paid for doing what I like the most. I like playing and I get paid for it. And for most of us, we like to communicate, we like to express our views. And audit opinion is nothing but an expression of your view. And you actually get paid for expressing your view. So for communicating, you actually get paid. So you start enjoying it. Very rarely you get an opportunity where somebody is ready to listen to you. So here is a profession where you actually get recognized, you actually get paid for expressing your opinion. So with this backdrop, let me come to the standards. Small caveat, whatever I speak now, none of it should be seen as views of any of the boards I am part of the institute or of the council of the institute. Very little bit of a context setting. If you can see the left-hand side of the slide, this is in a lighter vein, but all of us in our day-to-day professional life, we do come across people who have this understanding. We all know that audit opinion is reasonable assurance. And audit opinion, reasonable assurance, many have this impression that reasonable assurance means you cannot hold me responsible. That's an impression many have. And there's some who go to the extent of having an understanding that we are reasonably sure management has done a reasonably good job at implementing reasonable controls that are reasonably effective. While it looks in the lighter vein, I have come across many people who think reasonable assurance means it is something like this. It is not so. It is far, far higher level of assurance. We don't call it absolute assurance. And we call it reasonable assurance for the following reasons. Absolute assurance means a mother promise. We can't do that level of a promise because financial statements by their very nature involve lot of estimates and judgments. So whether it is fixed assets, estimated life of asset depreciation, estimated residual value, inventory, estimated net realizable value, or if you take investments, lower of cost and fair value estimate, or if you take provision for bad debts estimate. So when there are estimates involved, you cannot give a mother promise. So given that backdrop, we don't call it absolute assurance, and hence we call it a reasonable assurance. The other reason why it is called reasonable assurance is because of the way the work is performed. The way the entire audit work is performed, we are not required to verify 100% of everything. So your entire audit process involves lots of sampling and also making judgments on evidence which comes before you. So given the fact that whether it is the financial statements or the audit procedures, they involve judgments to be made, you can never have an absolute assurance, and hence we call it reasonable assurance. And what you see on the right side of the screen are three fundamental principles I have practiced right through my career. Some of you would have heard me on these, but at the cost of repetition and for setting the context, I'd like to spend 30 seconds on the third one. The first two you can read for yourself. When it comes to audit opinion on financial statements, I have highlighted that it is a communication. Just like in our personal life, we expect family members to communicate with us truthfully and completely. Even in our professional life, we expect our professional colleagues, partners, staff to communicate truthfully with us and completely with us. So when you expect anybody communicating with you to have a communication which is complete and truthful, it is only fair that the audit opinion, which is a communication, should also be complete and truthful. And as a principle, every communication should meet 3 C's. The communication should be clear, concise, candid. All the 3 principles have to be met. And that's the foundation of audit reporting. Founder, president of the institute, his words way back in 1950 hold good even today. I'll just read one element of this quote where it talks about the chartered accountant as a person on whom every member of society could rely and rely very strongly. And that is what DC was attempting to explain in his initial address. The environment in which we are all currently doing audit, there are multiple elements, all of which you are all familiar. You're all familiar. But I would like to highlight a couple of points in this whole list. This list is self-understandable for each of you. One of it is, we all keep talking about an expectation gap. We all keep saying that the regulators are expecting a lot from us. The outside users of financial statements are expecting a lot from us. So as far as this gap is concerned, there are multiple components which are there, but one of those gaps we all need to acknowledge is what is called as the delivery gap. So we cannot be under the impression that there is no gap in the delivery. So even as per the current accounting standards or audit standards, there's a gap. Once we bridge that gap, then we can talk about somebody else. So if I have to talk about gaps somewhere else, I have to first ensure that my house is clean. When my house is not clean, I cannot tell somebody else what you are thinking is wrong. So there is the delivery gap which we need to all address. And the other point I would like you to keep in mind in the same context is, whenever we are expressing an audit opinion, while client may be appointing us, while client may be paying the fee, we need to appreciate that any professional work which you do because of a legal requirement, only public interest matters, not client interest. Even though client appoints, client pays fees, the what matters is only public interest, and public interest is paramount. So that backdrop is very important when we conclude our audit opinion. Now, here are a few slides. I will not go through all these slides. I will leave a copy with Mohan Sundaram to share with you. What you have in some of these initial slides is findings of the quality review board from the reviews which have been done across a 3-year period, 2016 to 2019. And in the quality review board, we have a 3-stage process of review. First, it is reviewed by an experienced chartered accountant of about 20 years. where it comes to the audit firm, spends in person about 7 days of time, goes through all the audit working papers to understand whether you have performed the work as per the audit standards. His report then goes to a group in the quality review board who go through all the observations, and then they send to the quality review board who will deliberate and decide whether any action is required. If action is required, it is referred to the disciplinary committee. So here is some statistics of the reviews which have been done. What you see, a pie chart on the right-hand side, is that more than half of the cases, there is either an improvement required or a significant improvement required. And please note, these are from reviews of audits of large enterprises, public interest enterprises, and those where the firms are specializing in audit. So in those cases, the fact is more than half of the cases, there is a need for improvement and a significant improvement in good number of cases. Just imagine for a moment, you are going to a doctor, medical professional, and you come across a statistic that more than half of them, the work is satisfactory or below satisfactory. What kind of message it gives to you about using the service of that professional? So this report basically tells that based on the reviews which have been done. Now, there are some statistics of the standard-wise non-compliances and all, which you can go through later. So with this backdrop, let's come to this reporting standards, all of which got revised effective 1st April 2018. The standards like SA 700, 705, 706, they got revised because of SA 701. So SA 701 came into existence as a new standard from 1st April 2018, but there were consequential amendments in the other three standards which had to get revised. So these are some abbreviations which are used in the presentation. Most of it are abbreviations you are familiar with. So let's get started with the first of the standards, SA 700, which is the main audit report. And this is what we are all very commonly using for issuing what is called as unmodified report. Most of us call it as clean opinion, unmodified report, clean opinion. This standard basically starts out saying that it is the auditor's responsibility to form an opinion on financial statements. So auditor cannot say that I'll keep on working. I will keep on analyzing. No. The standard fixes a responsibility on auditor that he has to close it. He has to form the opinion and issue the opinion. Unmodified opinion, or if required, a modified opinion. So the standard starts off with saying that it is the duty of the auditor to form an opinion. He cannot avoid forming an opinion. He has to form an opinion on financial statements. Then it talks about the contents of the audit report. And then when it comes to modified opinion, we have a separate standard. And important to note that this particular SA 700 is applicable only for audit opinions of a complete set of general purpose financial statements. So if there are special purpose financial statements prepared, let's say for due diligence purpose or any other reason, or if there is an audit opinion to be given specifically for a single element, receivables, or investments value or property, plant, equipment. Those situations are covered by separate standards, SA 800 and 805. So SA 700 deals with audit opinion for general purpose financial statements. And the idea is to ensure that the audit opinions are prepared in such a way that the user will know what he has to expect in the audit report, and for that reason, consistency and comparability across the world. Now, as I mentioned a little while ago, the objective of the standard is to require the auditor to form an opinion and express the opinion. So it's not sufficient if he forms, he also needs to express. What is it that he needs to tell? He needs to tell whether the financial statements which are prepared in all material respects, is it in accordance with the applicable financial reporting framework? So as far as financial reporting framework is concerned, we have broadly two frameworks. One is called a fair presentation framework, where you give a true and fair view, and another is a compliance framework. All of us invariably give it the true and fair view, which is the fair presentation framework. So as an audit opinion, you have to tell whether the financial statements are prepared in accordance with that particular framework. That's the first part. And for this framework, I would like to highlight that the fair presentation framework, the accounting standards which are applied in preparation of financial statements, we essentially have three accounting frameworks. So when you give your audit opinion, it should tell whether it is in accordance with the company's Ind AS rules 2015 or company's accounting standard rule 2006. Now it will become 2021, or in accordance with standards issued by the Institute of Chartered Accountants of India. So you need to give a reference to that. And to form this particular opinion, the auditor needs to conclude whether he has got a reasonable assurance. So from the work which he has done, he should feel that there is a reasonable assurance that financial statements as a whole are free from material misstatements. So he should be in a position to conclude that the financial statements holistically are free from material misstatements. Now, recall I told you two frameworks. Look at the right side of the slide. One is whether it's a fair presentation framework or a compliance framework. Invariably for all of us, it is a fair presentation framework. Now, this slide is an important slide and I'll go very, very slowly. I do recognize the presence of many senior chartered accountants here, but for the benefit of the younger members, I will go through this slide slowly because this standard is the product. It is the outcome of all the work which you have done. 200 series, 300 series, 500 series, 600 series. So by applying the standards of 200 series, 300 series, 500 series, 600, you finally come to this SA 700 and communicate. And for this conclusion on reasonable assurance, you have to go through this particular approach. And please note, while I put it in the form of a flow chart, your audit working paper, and when you form your true and fair view opinion, before you sign your audit report, you should have got convinced on each of these elements. First and foremost, you have to satisfy yourself as a signing partner that in the financial statements, significant accounting policies have been adequately disclosed. If accounting policies are not adequately disclosed, you cannot come to conclusion of reasonable assurance. So whether it's adequately disclosed is an important responsibility you have to do for you to come to the conclusion of reasonable assurance. Second, consistency and appropriateness of accounting policies with the financial reporting framework. So it's not sufficient to have accounting policies. That accounting policy should be consistent with the respective financial reporting framework. Recall, I told you there are 3 frameworks: Ind AS framework, companies accounting standard rules, and standards issued by institute. For example, if I am following Ind AS, then the accounting policy should sync with the provisions of Ind AS. If I am following AS, then it should sync with the same. So having a policy will not be sufficient. It is important the policy should tally with what is there in the financial reporting framework. The third element you should satisfy yourself is reasonableness of accounting estimates. In the financial statements, invariably there are estimates. Estimates of life of assets, estimates of residual value, estimates of NRV for inventory valuation, estimates for provision for bad debts, estimates for provision for various warranties and other liabilities, estimates relating to maybe income recognition, percentage of completion method, proportion of work completed is an estimate. So as a signing partner, you should be convinced on the reasonableness of accounting estimates. Next is, you should convince yourself as a signing partner. Please note, whatever I'm going through now, you should check box, as DC was mentioning, before you conclude reasonable assurance. The fourth element you should satisfy yourself is the relevance, the reliability, and comparability and understandability, qualitative characteristics of information in financial statements. You should not give irrelevant information. The information given should be reliable. It should be comparable, current year, previous year. And it should be understandable. Understandability comes if you have explained it properly, given it in the right heads of account, presented it in the right places. So that responsibility is also yours. And please note, whatever we are discussing now are for the purpose of concluding whether you can give a reasonable assurance. The next thing you should satisfy yourself is whether the disclosures in the financial statements are adequate to enable the user of financial statements to understand the same, understand the effect of material transactions or events on information in financial statements. For example, during the year, there is an amalgamation. During the year, there is a capital reduction. During the year, there is a sale of division. So wherever there are such kind of transactions, is there enough disclosure so that user can understand on his own? If he is not able to understand, which means you can't give a conclusion of reasonable assurance. So the responsibility to ensure there are adequate disclosures is also with the auditor for him to give that reasonable assurance. Here I will step aside and spend some 45 seconds or a minute. And I would like you to follow this a little carefully for a reason that over the last 5 years in particular, I've come across many who have this impression that the audit standards or even accounting standards for that matter are meant for use by the chartered accountant, by the auditor. But please note, whenever the standards are drafted, they are drafted keeping in mind the user of financial statements. None of the standards are drafted keeping in mind the person who is preparing the financial statement or the person who is auditing the financial statements. They are all kept in mind keeping in mind the user of the financial statements. So the next element is the terminology which is used in financial statements. Is it appropriate? DC here again gave that example of somebody thinking it was an aircraft, whereas it was something else. So as far as your items in the income statement or items in the balance sheet, the responsibility to ensure that the right terminologies have been used for a user to understand is also the responsibility before you can conclude on reasonable assurance. The next is there an adequate description in the notes to accounts or somewhere that these financial statements are prepared in accordance with Ind AS or accounting standards, whatever is the respective framework. Then assessment of whether the financial statements in all material respects meet the requirements of the applicable financial reporting framework. That is, whether the recognition principles correctly followed, measurement has it been correctly followed. So you have to now test this. What we have discussed earlier was all in the context of disclosure. So here, in all material respects, whether recognition principles correctly followed, measurement principles correctly followed, and qualitative aspects of accounting practices and possible bias in management judgment. As I mentioned to you, financial statements involves multiple estimates and judgments. The primary responsibility is that of the management. So as an auditor, I should be convinced whether those judgments or estimates have been arrived at properly. So that responsibility. Or is there any bias of management? So they might like to underreport profits or overstate profits. There's a potential bias. So I need to convince myself that there is no bias of the people involved in preparation of financial statements. Then materiality of uncorrected misstatements individually or in the aggregate. So sometimes the mistake individually itself is big enough. Many times, small mistakes aggregate is material. So you have to search for both of them, materiality being an important threshold. And then for all of what you have done, is there sufficient appropriate audit evidence? So it's not just that you go through this. So if you're looking at estimates, if you're looking at judgments, percentage of completion method, percentage of completion of a construction contract, is there sufficient appropriate audit evidence which you have got with you? Then you conclude that there is reasonable assurance and issue an audit opinion in SA 700. So that flowchart is a very important flowchart for somebody to issue that 2-page audit report. Without going through that whole list, you can never issue an audit opinion. So this is the crux of SA 700. Now, report in SA 700, the format underwent a change, and all of us know that excellence is a journey. Excellence is a journey. So if you look at some of the changes, sometimes it might look like, oh my God, it's so basic. How did somebody miss out earlier? But the truth, my experience in standard setting, there are many occasions you come across that some elements have been missed out despite the best of the efforts. Look at that point number 3. Look at that point number 3, for example. As an auditor, the old format, the title was Report on the Financial Statements. The revised one says Report on the Audit of Financial Statements. So look at it. The improvement in the communication. I actually never reported on financial statements. My report always was, I did this audit. For this audit, this is my opinion. For the audit, this is my opinion. So look at the title correction. Like that, the improvements keep happening and it's a journey, as I mentioned to you. The other important edit, and I say this because one should never come to a situation that I have achieved perfection. Look at this point number 5. Point number 5 on the left side of the screen. Management responsibility for financial statements. Now, management typically in companies would mean the CEO, CXO, that profile. But we all know that the board of directors, the audit committee also has a responsibility. And in audit standards language, we call it as those charged with governance. So the audit report format changed to say that responsibilities of management and those charged with governance also. So it is not only responsibility of the management, but also of the board of directors. So that's again another edit. So improvements keep happening. And these are some improvements I thought I should highlight just to tell that the world is still not yet perfect. It's a journey. And look at that point number 3. It's such a beautiful one. At least personally, when this change came, I used to think, oh my God, all these years, we gave title like this. I couldn't believe myself. But the truth is we used to give it like that. And now there's a revised title which appropriately describes the work which all of us do now. So in this particular standard, the focus is on an unmodified opinion. If you have to give a modified opinion, then you have to go to SA 705. So when do you give modified opinion? Qualified adverse disclaimer. Maybe 15 minutes from now, we'll go there. Modified opinion. So in the unmodified opinion, you have to confirm that financial statements prepared in accordance with the fair presentation framework, financial reporting framework. And if you are not achieving the same, the standard requires you to discuss with management and determine whether there's a need to modify the opinion. And if the financial statements are prepared in accordance with the compliance framework, those cases, you need not worry about a fair presentation because there it is about yes or no, yes or no. There again, you have to discuss with management if there's a non-compliance and arrive at your opinion. Now, elements of an audit report, there's so many elements which are there. I'll focus on 4 elements. The slide deck contains details of other elements also, but I will focus on 4 elements. First is on going concern, particularly in the pandemic period. And I know trading organizations, restaurants, many shops, forget about manufacturing companies, large companies and all. I know people have been doing businesses like restaurants, traders and trading shops and all. Many of them have closed down, or many of them are going through a period where there's a lot of doubt as to whether they will continue the business in future. You should not end up with a situation where you issue an audit report in September saying it's going concern, and in November, the banks have decided to recall the loan or something and the entity is closed down. So that would be an extremely bad situation or embarrassing situation to be in. So in SA 700, the standard beautifully identifies the auditor's responsibilities to report on going concern. 2 broad situations are there. Situation 1, where the going concern basis of accounting is inappropriate. They should not follow going concern, but they are following. You are very clear that next 12 months, it's unlikely they will survive. But they are still preparing financial statements on going concern basis. You are required to give only an adverse opinion. You don't have a choice on the same. The second situation is the going concern assumption is appropriate. It is good. It is relevant. The business will be there, but there is an uncertainty. There is a material uncertainty. I will survive, but there is a but. There is a but available. So, but is lockdown will be there only for a month, only for 2 months. So there is a but which is there. So in such situations where you feel going concern assumption is appropriate, but there is a possibility that they may run into difficulty. Those cases, scenario one, disclosed in the financial statements. So balance sheet notes to accounts, they are disclosing that there is uncertainty. We expect their lockdown to shut down, to be revoked in 2 months' time. Theaters should reopen, malls should reopen and all. So you are making some assumptions and all. Those cases, you can give an unmodified opinion, clean opinion, but you should have a separate paragraph on this uncertainty. Second situation, it is not disclosed. As of now, going concern is fine, but there is a doubt. So those cases, if you are not disclosing such circumstances, auditor should check whether I should give a qualified or an adverse opinion. I need to decide on that. So broadly on going concern, you have these two scenarios, scenario A, scenario B, and in scenario B, it's B1, B2. B1 means they have disclosed it, then just give a suitable paragraph in the audit report. If they have not disclosed, then you have to see whether you have to give a modified opinion. This is an important slide, and I have a request to all of you. Only 2 points, but the request is the following. Every time you issue an audit report, including for non-corporate entities, proprietor or any businessman, maybe his turnover is 4 crores, turnover is 8 crores, turnover is 15 crores, small guy. It could be company or non-corporate, whatever it is. Irrespective of the size of the organization, I think it is our responsibility to highlight to the entrepreneur, to the businessman, saying that one, this financial statements preparation is your responsibility. While I might have helped you, etc., and all, but by law, it is completely your responsibility. And tomorrow, if there is something wrong, you might be held responsible. So please take note of that. While I am expressing opinion, I would have helped you, etc., and all, but the primary responsibility is yours. Internal controls responsibility yours. And please note, I am writing in my audit report. I am specifically highlighting it's your responsibility. You should know that I am highlighting this part. So that is one aspect. Second is the judgment on going concern. The judgment on going concern is again your responsibility. So I need to again tell the entrepreneur that, look, in the audit report, I am writing a separate paragraph. That the going concern judgment is the responsibility of the preparer, that is entrepreneur. I am putting that. So please note, I am writing something on your behalf. So please be aware of the same. My view, while the businessmen might casually say, sir, you do it, sir, whatever, they might push it. I think as a profession, it is our responsibility, just like in an aircraft, many of us would have traveled 20 times, 30 times, 40 times, but each time the crew will keep announcing, where the seat belt, do this, do that and all. And for emergency row, they know that you have sat in the emergency row so many times and all. Some faces become familiar over time, but still they have to tell you, still they come and tell you. and they repeat the whole sentence. So on exactly similar lines, it's important that as a profession, we should keep telling it loudly, repeatedly to people that, look, people think it is our responsibility. No, 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 it is yours. It is yours. And we should keep on highlighting it every time we issue an audit opinion. Then this slide talks about responsibilities of auditors, which again are part of the audit report, where you make these statements that the fact that reasonable assurance is a high level of assurance, but the fact that it is not a guarantee, and that the work is done as per the audit standards. You also state that misstatements can arise from fraud or error, and they could have an influence on the economic decisions of users. So when you're giving this again, read out to the entrepreneurs. I keep giving this example like in the aircraft, the crew keeps on repeating every flight you do. Sometimes it's boring, but there's a reason for why they do it. The reason for why they do it on exactly similar lines. We need to keep telling the client that, look, my audit opinion, clean opinion, unmodified opinion does not mean there can be no fraud or error. Despite having done the audit, I've been auditing you for the last 4 years, 5 years, 7 years, 8 years, but still there's a risk that there's an undetected fraud. I need to keep on telling it, and it should sink in the minds of the entrepreneur, and it should keep sinking. So the audit report should carry these paragraphs which are there among several paragraphs. These are 2 important paragraphs I thought I should highlight for the benefit of all. Now, similarly, the 4th element of audit report, there could be some legislative requirements where you will require to report on additional aspects. For example, CARO or in Banking Companies Act or Insurance Act, there are some additional legal requirements of reporting which you need to give. So these slides basically deal with the explanation for the remaining elements. Recall I showed you a slide of 14 elements, but I have briefly touched on only 4 elements. The remaining 10 elements, the explanation is available in these slides. In these slides, the explanation is available. Now, this slide, the last of the slides on SA 700. And don't get me wrong, but almost every week or once in 2 weeks, people keep sending a mail or a message, help me with a format for this situation, that situation. But please note, the format of audit report is available in the standard itself. There are 5 formats available, including for non-corporate entity, for unlisted company, for non-corporate entity. The illustration format. There's so many people would have asked me, what would be the audit report format for a society, for a trust, for a partnership firm? But the template is available inside the standard itself as an illustrative framework. So all of these are available. Now, here is a list of non-compliances on SA 700. I will not go through each of these ones, but I'll highlight a few of them just for you to get a dipstick or a high-level view of the common kind of mistakes. Some of you might think, do these kind of mistakes happen? Some of you might think, do these kind of mistakes happen? Whatever I'm going to show you next 5-6 slides, all these are reviews of large listed companies and audits of done by fairly large established firms who have been in existence for 20 years, 30 years, 40 years. This is situation 1, where audit opinion is given, it is signed firm, but the firm registration number is not there. Leave it. Second case, look at this case. Now, these are cases which I say is cases which actually affect the brand of the profession. And my request is, particularly senior members, wherever you come across, please do highlight to the respective younger members wherever you come across these situations. Look at this case, and please note, listed company, large audit firm. The audit opinion says, in the case of profit and loss account of the profit stroke loss. So the person has copied the format as it is. The format has been copied. Whereas this particular company, when we reviewed it, I was wondering maybe 1 year profit, other year loss, all combinations I tried. But the fact was the person did not even bother to read the 2-page audit report he's signing. The 2-page audit report he's signing also he did not bother. I'll share my experience of articleship, and hats off to the principal with whom I did it. And one auditor who used to do the audit of a company which I was working earlier. Even for the audit report, despite they being very senior members, at that time itself, they were in the age of 50 plus and all. Every time they sign an audit report, they will go through a call-out procedure. So call-out procedure would mean that not just they reading the report, they would actually ask somebody to read the report, and they would keep reading it parallelly line by line just to see nothing is missed out. So they were so very particular. Contrast, I'm sure many of you will admit here, many here, audit report, printout, staff, last minute, 30th September, night 11 o'clock, sign it off. You don't have time to go through the reading the whole 2-page report. So profit or loss. So these are type of mistakes. Here is a case where audit report has been given without giving the headers for the various sections. And here is a case where somebody has said that you are complying with the accounting standards and all, but in the financial statements, many standards they did not comply. For example, they were required to give cash flow statement. They did not give cash flow statement at all. But the opinion said everything is available. So that kind of mistakes is what you come across. Now look at this mistake. And please note, large company, listed company, established audit firm. The heading of audit report reads auditor responsibility, and it starts as in our opinion. Now that even the 2-page report, for which he must be collecting fees of 3 lakhs or 7 lakhs or 20 lakhs, person cannot read the report. And heading audit responsibility and says in our opinion. And then this is a bank audit. Bank audit, we all know, joint audit, public sector, all the kind of stuff. The title of audit report, independent auditor's report, the person still gives. Old one, copy paste, it continues, audit report. So typically these kind of mistakes are there. And here is one audit report where cash flow statement was there in the financial statements, but the audit report did not cover the cash flow statement. So these kind of mistakes are there. Illustrative list I read out, but there are several of them you can go through later. So with this, let me come to SA 705. 705 deals with modified reports. Modified reports, 3 categories. They can either be qualified, adverse, or disclaimer, either of these. The need for issuing an audit modified opinion arises. The standard provides that the requirement of issuing a modified opinion arises when the auditor, after doing the work 200 series, 300 series, 400 series, 600 series, after doing all the work, if he comes to a conclusion based on evidence, that's critical word, based on evidence, that financial statements as a whole are not free from material misstatements. So that's one situation. Or he is unable to get sufficient appropriate audit evidence that financial statements are likely to be free from material misstatements. So either of these two situations, the question of modified opinion arises. Situation one, he has done all the work, he has gathered evidence, and based on evidence, he feels that it is not free from material misstatements. Situation two, not able to get evidence, and because there is no evidence, I am not able to tell whether it is free from material misstatements. So two situations where the question of modified opinion arises. Types of modified opinion, as I mentioned, qualified, adverse, disclaimer. Now, for arriving at these, which category of modified opinion, the following are important. Just come to the left side. Just come to the left side of the slide. The question of modified opinion arises based on whether there is a material misstatement. What is the item and whether there is a material misstatement, like depreciation wrongly calculated, NRV estimation of your inventory, impairment of receivables, nature of matter, or inability to obtain evidence. So it can be because of either of this, plus the auditor's judgment on pervasiveness of the matter. Pervasiveness means, does it affect almost all of the financial statements? Does it affect only one item, or does it affect across? It's like, do you have cancer only in the hand, or is cancer spread everywhere? Now, if it is spread everywhere, then it is called pervasive. But pervasive also includes, it is affecting only one element. It is not affecting other parts of financial statement. It is affecting only one element. But that single element is a critical element. So there can be a trading organization where in the balance sheet, receivables is the only major item. Otherwise, I buy and sell. Nothing else is there in balance sheet. Receivables is the only major item. So other items in balance sheet are all nice, no issues. But it is affecting only one item, and that one item is a substantial element. It's 30% of the balance sheet, 40% of balance sheet. Then also it is called pervasiveness. I want to highlight again, pervasiveness, the general impression people have is it should affect almost all parts of the financial statements. But please note, even if it affects only one item, and that one item is a substantial element, like a brain, in the cancer example, a brain cancer. Once that comes, it's as good as the whole body is dead. So if it affects a substantial part, then also it is called pervasive. So conclusion on whether there's a qualified opinion, adverse or disclaimer, while I will walk you through now, I want to highlight again, based on my experience, the following. Particularly when it comes to public sector audits, many cases I've seen, there is no need for a modified opinion, but auditor gives a qualified opinion. There's no requirement at all. But auditor feels, I want to be safe. But please note, giving a qualified opinion where it is not required is also wrong. Similarly, many cases where qualified opinion is enough, but auditor goes and issues an adverse opinion. Those situations should also not happen. So for this, there is this beautiful guidance in the standard. And what you see as a table here is not my table. It's a table copy paste from the standard. And the guiding principles are very, very simple. financial statements are materially misstated, but it is not pervasive, then only qualified opinion. Like provision for bad debts is not correctly calculated. Other parts of balance sheet, everything is correct. P&L is correct. Those cases, qualified opinion. The financial statements are materially misstated and it is pervasive. It is affecting income recognition. It is affecting receivables. It is affecting inventory valuation and all. So it is affecting multiple elements. Then adverse opinion. So misstated, not pervasive, qualified opinion. Pervasive, adverse opinion. Next category, inability to obtain sufficient and appropriate audit evidence. If you are unable to obtain evidence relating to a matter which is not pervasive, I'll give a small example. So I am unable to get evidence relating to some portion of fixed assets, physical verification. So those cases, only qualified opinion. I am unable to obtain evidence relating to fixed assets, relating to inventory, relating to receivables. Nothing I am getting explanation. Then disclaimer of opinion. So inadequate evidence or no evidence, not pervasive, qualified opinion. If it is pervasive, then you have to give a disclaimer of opinion. And here again, I want to share, there are cases where financial statements are materially misstated and they're pervasive. People have given a disclaimer of opinion. You cannot give disclaimer of opinion. You can only give adverse opinion. Disclaimer of opinion can be given in only one situation. Disclaimer, that is, I tell that I cannot give opinion. I cannot give. That can happen in only one situation. No evidence and it is pervasive. So no evidence for multiple elements in financial statements. That is the only case where you can tell, I will not give opinion. All other cases, it's either qualified or adverse. So that's the categorization of the evidence. Now, as far as the modified opinions are concerned, recall I talked about three things. If you recall, just look at the left-hand side bottom. Left-hand side bottom, I talked about the following three things. Nature of matter, whether it is materially misstated, inability to obtain sufficient evidence, and pervasiveness. Three things. So let's get a little more understanding of these three things. So for these three things, the nature of matter, whether it is materially misstated, can relate to the selection of accounting policy. Selection of a wrong accounting policy. I'll give a small example. When it comes to accounting policy, take a case of services revenue, AS9, revenue from rendering of services. Services revenue, AS9 gives you a choice, or AS9 provides for completed services method, proportion of completion method. Many have this impression that I can follow either completed service method or proportionate completion method. That is not correct. That is not correct. AS9 says, if service involves single act, then only completed service method. If service involves multiple activities, then only proportionate completion method. So you have to see whether the selection of accounting policies is appropriate. If it is inappropriate, not pervasive, qualified. Inappropriate, and pervasive, which means policy for inventory is inappropriate, fixed assets is inappropriate, income recognition inappropriate, then you have to give I'm pausing a little so that you can form the judgment before me. Those cases you have to give a adverse opinion. Second one, application of selected accounting policy. The policy selected is correct, but the way I have applied it is not correct. Like for example, inventory, lower of cost and NRV. But the way in which I'm determining the cost, for example, I included selling administrative overhead also in the cost. For example, that is a inappropriate application of accounting policy. The policy selected is correct, but I have wrongly applied. So if the application of policy is wrong, not pervasive, then qualify. Application of policy for income recognition, for inventory, for receivable valuation, for tax measurement, multiple elements, then adverse opinion. Third is appropriateness or adequacy of disclosure in financial statements. And I want to spend a minute on this. There are many people I have come across who have a feeling that if P&L profit is arrived correctly, balance sheet is properly done, the job is done. Answer is no. For when you are expressing an audit opinion, it is equally important to ensure that in the financial statements, is there enough disclosures? Every accounting standard has disclosure requirements. Have all those disclosures been done? That responsibility is also of the auditor. So I should be satisfied whether appropriate disclosures have been done. That word appropriate disclosure is important because sometimes people tend to give some inappropriate disclosures. So if you're giving irrelevant disclosures, then also you're responsible. So appropriate disclosures and adequate disclosures also your responsibility. Not pervasive, qualified. But inadequate disclosures is pervasive. For multiple items, disclosure is not proper. Then adverse. Coming to the second element, inability to obtain sufficient and appropriate evidence. Situations are beyond control of entity. Like for example, fire accident, some records have been destroyed. So I don't have evidence. Circumstance relating to the nature of or timing of the auditor's tests and procedures relating to timing of audit. Small example, inventory verification. Ideally, I should do it on balance sheet date, 31st March. But sometimes non-corporate entity, I was appointed auditor only in July. Year ending March 21, I was appointed in July 21. So those cases, I cannot go to 31st March and verify the inventory. So I don't have enough evidence to go and verify. I can only do a back procedures. So those cases are cases of inability to obtain evidence because of the timing. I got appointed only now. There's nothing I can do for that period. Or limitations imposed by management. So there are, let's say, 20 branches. There are one or two major branches, one in Guwahati, one in, let us say, wherever it is, and Chandigarh. But auditor, the management has not encouraged me to travel to those locations and do a physical verification and all. So if there are scope limitations, those all come under inability to obtain sufficient appropriate audit evidence. So in these situations, if it is not pervasive, I'm pausing, you should form opinion. Inability to obtain evidence, if it is not pervasive, if it relates to only one item, then give a qualified opinion. If it relates to multiple elements, then you have to give disclaimer of opinion. Then last is pervasiveness. I explained that enough, so I'll not repeat. Pervasiveness means multiple elements, but as I told you earlier, there can be only one element, but that one element is so very big that it is constituting substantial part of financial statement. It will still be treated as a pervasive one. So whatever I've explained last few minutes, there are examples available in these few slides. Whatever I've explained are all available as these examples. Now, this is again an important slide on SA 705. There are instances we come across where there are scope limitations which come up after you accepted the audit. After you accepted audit, scope limitations come up. Those cases, recall, scope limitation means evidence is not there. I'm not able to do the work and I don't have evidence. And please recall, inability to get sufficient appropriate audit evidence. If it is pervasive, you will end up with disclaimer. So those cases, the auditor should tell the management, remove the scope limitation. Management is not agreeing, document it, go to those charged with governance, partners in a partnership firm or board of directors, and after communicating to them, see if there is a possibility of doing alternate procedures. Like for example, inventory. Is there a way to do backdated procedures? So if you can roll back procedures. So if you can do all those procedures, fine. If you are still unable to obtain sufficient appropriate audit evidence, if it is not pervasive, qualify. If it is pervasive, which means you have to disclaim. But here, please note, we are in the slide where scope limitation has come after accepting engagement, but before issuing a final opinion. So those cases, if there is no prohibition in law, you have to quit the audit. But if law says, like listed company SEBI does not allow, so those cases, you have to go and give a disclaimer of opinion. So then you have the opinion, modified opinion. You have to tell the basis on which you arrived at modified opinion and all. And there is enough illustrations available in SA 705 on the language to be followed. Language to be followed. If you are qualifying because of material misstatement, this language is there. For example, it says, the language is in the auditor's opinion, except for the effect of matters described in the basis of qualified opinion section, gives a true and fair view, whatever. So that's the language which is there. Similarly, if you are qualifying due to inability to obtain sufficient appropriate audit evidence, then the language should be in the auditor's opinion, except for possible effect. There's no effect. When you don't have evidence, you don't know whether there's an effect or no effect. So the language is possible effect of matters which are described. It gives a true and fair view. So that statement does not give a true and fair view. So there's a language drafted available in the standard itself. Now, let me move on to the next of the standards, SA 706. My view, the beauty of audit standards is SA 706 and 701. 706, my only request to all of you, and I come across many cases where auditors think my responsibility comes down because I have included emphasis of matter, because I've given other matters. Please note, you are required to give emphasis of matters subject to some situations only. You can't just give emphasis just like that. That is also wrong. So which means you are giving irrelevant information. Now, Simple words, distinction between emphasis of matters and other matters. And here again, very, very common mistake we come across. Emphasis of matter always means it relates to something which is there in the financial statements. So in the audit opinion, if you are giving emphasis of matter, you should tell, refer to schedule number 3. Emphasis of matter relating to schedule number 6. Emphasis of matter relating to note number 12 in the notes to accounts relates to note number 19 in the notes to accounts. So emphasis of matter is always relating to something which is already there in the financial statements, balance sheet, P&L, cash flow, notes to accounts. So you can't give emphasis of matter relating to something which does not come anywhere here. It can be given only relating to what is already there in the financial statements. And emphasis of matter should be given only in those cases where auditor is coming to a judgment that it's so very important that I want to draw the attention of the reader of financial statements. For example, during the year, there was an amalgamation which happened. During the year, there was a capital reduction. During the year, there was a sale of division. So during the year, there's a major tax dispute assessment issue. So which can threaten the continuity of organization. So those cases, the auditor should tell, refer to note number 12 relating to the merger of the so-and-so with me. Note number 19 relating to legal disputes. Note number 23 relating to sale of division. So if in the auditor opinion, it's something so very important, I want to draw the attention. And please note, emphasis of matter is not a substitute for modified opinion. Please note, modified opinion comes only if there is a misstatement or inadequate evidence, only those cases. So emphasis of matter is something is there in financial statements and I want a user to read that without fail. Without fail, I want him to read. It's like your TV breaking news or that big notice board. I want people's attention. Only those matter have to come in. And emphasis of matter should not include a matter which is already included in key audit matter. Now, other matters means these are not there in the financial statements. Other matters should be relating to something which is not there in balance sheet, not there in P&L, not there in cash flow, not there in notes to accounts. For example, there's a scope limitation. So for example, I could not verify inventory at one branch. So those kind of items is what you have to bring it in other matters. Like you could tell, I was appointed in July for the year ending March 21. And consequently for audit, for inventory verification, I did a rollback procedure. So those, and I could not do a physical verification. So those kind of things can come in other matters. So that is the distinction between emphasis of matter and other matters. So whatever I've explained is what is detailed here. And inside the standard, again, there are illustrations available. Now I come to the last of the standards, SA 701. As I cautioned you at the start, I said I might repeat it. And I will unhesitatingly repeat. Standard is mandatory for listed companies and the audit of listed companies. Suppose there is no key audit matter, you are still required to give a sentence saying that, in my view, there is no key audit matter. So such a huge responsibility is there. Unlisted companies, private limited companies, non-corporate audits, standard is not mandatory. But as I told you at the start, my sincere request for all of you, every time examine whether it is helpful to add key audit matters. Please note, many of the managements or board of directors have an impression that if you give key audit matters, it means something negative. But please note, my own personal view is when there is a key audit matter given in the audit report, it actually is an additional strength. It is an additional affirmation. What happens in key audit matters is the auditor writes a paragraph where he tells, look at this example of Container Corporation of India. The auditor tells, in my opinion, auditor's opinion, receivables from government is an important area of audit, judgment and all. The auditor goes on to tell, I performed these procedures, and he comes to conclusion that, in my view, these receivables are recoverable. Now, when somebody writes like that as an auditor, as a board of director, as a management, I should only be happy because somebody is giving you that assurance and specifically telling it. So if you come across board of directors, etc., who have that impression that key audit matter in audit report means negative, you need to correct that and tell them that it is actually a reaffirmation which is positive for a person. What you see here on this slide is the first of the public sector organizations where recall this standard came into existence from April 2018. So April 18 to March 19, first accounting year, and look at the date of press, May 2nd or whatever date, that audit report, public sector organization, audit report says the receivables from government or receivable, etc., are good to be collected and all. So it's basically a reassurance given to users of financial statements. Without this kind of a statement, the users would have been doubtful. This money from government receivable for a long time, whether it will come, not come and all. But now with auditors writing this paragraph in the audit report, the management should actually be happy that somebody is confirming that it is recoverable. So that's the importance of key audit matters. Now, this standard, I would say, is redefined audit because audit opinions will no longer be templatized ones. Audit reports will become speaking reports. What is key audit matters for company A is different from that of company B. And for company A in year 1, need not be a key audit matter in the next year. So each year audit report talks of what are the key areas of audit of that particular year. So this project, SA 701, and we follow the International Standard of Audit issued by International Audit Assurance Standard Board. They call it ISA 701, ISA 701, we call it SA 701. The International Audit Standard Board developed this standard considering that the users of audit report want to actually know what is it that you guys are auditing. I want to know, tell me what are the 3 big things you have audited. Like for example, when you ask your staff audit manager, you ask him, you did the audit, now tell me what are the 3-4 areas you have done. That's a very natural question you ask. Here also, the user of financial statement wants to know from auditor, what are those 3-4 things which you believe are super important in your view, and how did you convince yourself? So that expectation is there from the user of the financial statements. And it also ensures the quality of audit goes up because when you're telling it so specifically in the audit report, the quality automatically goes up and audit will also become more relevant. And it became important because of increasing complexities in financial reporting framework. So if you look at accounting, it's not as simple as what it used to be in the past. And let me tell you friends, the way businesses are growing and the way transactions are done, there's so much of complexities which are coming in the accounting transactions. And some of us might think they are applicable to large companies and all. It is not so. Even smaller ones, startups and smaller ones, I've come across, there's so many complexities these guys do. Share-based payment, startup. Almost all startups, for the employee, share-based payments are given. So share-based payment accounting is not a simple accounting, it's a complex one. Second, take a very small trader shop, glasses. I keep giving this example, glasses. A shop which is doing an annual turnover of 1.5 crores, spectacles, glasses, local brand. Now that shop tells, buy one glasses now, come back within 1 year, you will get a 30% discount for a second pair of glasses. So there is a loyalty bonus being given. Or the glass guy tells, I'm selling you this, next 2 years, anything happens, you come, I'll repair it free for you. So when he's selling this frame for 2,000 rupees, he's undertaking an obligation to repair it in the next 2 years. So my income of 1.5 crores includes some 7, 8, 10, 20 lakh rupees, which I have to incur for repairing the glasses if they come back or replace. So I can't say entire 1.5 crores bottom line profit. I should hold back some money for that provisioning for repairs. That estimating provision is not an easy one. It's complex. So there are different kinds of complexities which are there. How do we address that? The benefits of this standard. It is now about 3 years since the standard has been in existence. And we have to test whether these benefits have been achieved. The expected benefits were 5 benefits. Increase transparency in the audit report. Second is give a basis for users of financial statements to engage with the company, I'll give an example. Let's take, there's an audit report where nothing is mentioned. Second situation, audit report which says 3 key audit matters. So I am a bank who is lending. I am a rating agency who is doing credit rating. So what I would do, when I engage with the company, I will ask, your auditors have made this key audit matter relating to receivables. Can you help me understand more? So it creates a basis for engaging. So the conversation starts. So the audit report itself tells that these are 3-4 important areas. So the user of financial statement can start engaging based on that. Somewhere there should be a starting point for a conversation. Then you can ask a follow-on question and keep moving forward. So it's in that context that the second benefit. The third benefit is increased attention to disclosures. So what is happening is in a template-based audit report, people stop reading audit reports because they know audit report means nothing will be there. It will simply tell true and fair view over. But now in the audit report, you are telling that these are 3-4 important things I have seen during the year. So which means people will have that higher level of attention. And because of these reasons, on the auditor, there will be that spotlight. There will be that extra spotlight on that person. And last, it enhances the communicative value of an audit report because you are telling something which people can connect instead of giving a standard template, true and fair view, full stop, copy paste all the lines. So there's nothing specific to the audit client. From that angle, this SA 701 is a very interesting one. Now, these are 3-4 slides. I will skip, but you can go through later. Based on experience of various countries, what these slides show is what are the areas where key audit matters are given. Key audit matters are given relating to effectiveness of internal controls, liabilities carried by the organization, provisions for warranties, provisions and all, complex accounting, amalgamations accounting, financial instruments accounting, industry specific, like telecom industry and all, the bundling of revenues happens. So those cases, segregating the revenue, it's a complex one, industry specific complexity, impairment. And if you look at almost all countries, impairment is the maximum one which is reported, and asset related capitalization of assets or relating to estimated depreciation, life and all. So those are key audit matters. This slide talks about typically how many key audit matters are there. Key audit matters are there. Usually in these audit reports, between 2 to 4 key audit matters come up. 2 to 4 key audit matters come up. And this is again a country-wise one. What are the individual areas of key audit matters are all listed here. This is from the Nifty companies, our India Nifty, National Stock Exchange Nifty companies. The key audit matters which are reported inside the audit report. And please note, for audit of unlisted companies also, this is correct. For audit of non-corporate entities also, you'll come across this. Just think yourself. Just go back last year when I was auditing this client, estimating provision for tax, lot of judgment was involved. Allowable, disallowable, lot of judgment was there. Revenue calculation, percentage of completion. As a partner, I spent that extra time. Impairment of goodwill, provision for bad debts. Look at those lists of items. So in the 50 companies, 31 audit reports out of 50, 31 audit reports talked about tax related issue as a key audit matter, which means at partner level, they're spending time on that. 27 companies talked about revenue related matters. 23 companies talked about goodwill related, so on and so forth. So that's the analysis of the Nifty companies and all. So these are all some standards, some examples. Now, let me come to the core of 701. This standard is applicable only for a complete set of general purpose financial statements. It is not applicable for the branch audits, etc. and all. So it is prepared only for complete set of general purpose financial statements. Balance sheet, P&L, cash flow, notes to accounts. If all of them are there, then it is applicable. And recall, I told you, mandatory for listed companies. And for other companies, look at the last but one bullet point. I've mentioned earlier and I'm highlighting again. The management may request the auditor, please list down key audit matters in the audit report, and you are supposed to give the key audit matters. Now, what are key audit matters? Does SA 701 require you to do additional work? The answer is no. It does not require you to do additional work. Just look at your experience of bank audit or any audits which you do. After all the audit work is done, you filter it and you arrive at some 10 or 12 points, which you want to discuss with the board of directors, audit committee chairman. There are 10 or 12 points. So what SA 707 says is, from those 10 points which you identified for discussion with board of directors, you select 2, 3, 4 most important ones out of the 10. All the 10 are not key audit matters. Out of the 10, you are presenting it to the board of directors. You select based on your professional judgment, PJ's professional judgment, what are those matters of very high significance in the current year audit. Those items alone you have to give. So it actually comes as a funnel. So out of those 10 items, those which required auditors higher attention. So of 10 items my staff did, I spent more time on 3 or 4 items. And I believe out of these 4 items, 2 are super important. That is key audit matter. And these key audit matters, as I just told you, it comes like a funnel. You filter it out and take those 2-3 items which have to be reported. These key audit matters are broadly 3 categories. This is almost the end of the presentation, so please bear with me for a few minutes. So it broadly falls in these 3 categories. One is areas of high risk of material misstatement. Personally, for me, SA 315. SA 315 is the heart of audit. So when you start the audit, you're doing a risk assessment and you believe that these are few areas where there is high risk. So those areas of risk of high risk of material misstatement, from that key audit matter will come. Second area of key audit matter is there is some significant transaction which has happened. There's a merger during the year. There's a sale of division during the year. There's a buyback during the year. So if there are such events which have happened, those events, you have to, out of that you select. The third category, which is an important category, is managements are making judgment in preparing financial statements. They're making estimates, judgment on provision for bad debts, etc. They're making judgments. And as an auditor, I am forming an opinion on their judgment. So somebody is making a judgment and I am judging that judgment. So those areas, I spend extra time. So key audit matters can come only out of one of these 3 categories. So you have to filter it and give. So these key audit matters, typically you have to tell why you believe it's key and what procedures you perform and how you got satisfied. So these are a list of items you have to disclose. This is a single slide, which is a busy slide, but this slide is from the International Audit Assurance Standard Board. Single slide, it explains how the entire SA 701 operates. So this is about SA 701, and I'll conclude with this. As far as SA 701 disclosure concerned, there are illustrations available in the standard, and I've given some 7-8 slides of Indian companies of key audit matters again. For example, what you are now seeing is Infosys annual report, key audit matter, accuracy of recognition, measurement, and presentation disclosures of revenue. So why auditor believes it is a key audit matter, what are the audit procedures he has followed, and what is his final conclusion. So this is how he explains inside the audit report. That explanation comes. So this is second matter. So like this, several companies, I've given illustrations, including some overseas companies as well. So with this, let me conclude. I'm almost on time, probably I would exceed a minute or 2. So when it comes to these reporting standards, I would also like to draw your attention to one more standard called SA 720. And many people actually miss out SA 720. For example, when you're doing audit of private limited company and all unlisted company, the annual report where balance sheet, P&L, etc. comes, there's a director's report also. It is the auditor's responsibility to ask the management to give draft director's report. You have to satisfy yourself that the director's report and financial statement, there's no inconsistent information. You cannot have a situation which says that director's report says one particular unit, we stopped operations during the year, which means in your balance sheet, that unit which stopped operations, you should have retired assets from active use and carry it at realizable value. So many cases you come across where financial statements you prepared on one basis, director's report, innocently there'll be that 1 line, 2 lines somewhere, which will conflict with what you have done. So SA 720 says, As an auditor, it is your responsibility to do that reconciliation. You have to get a copy of the draft director's report and ensure the same are syncing. So thank you all for your patient listening. Stay safe, stay healthy, and stay accountable. Thanks to Madurai branch for the opportunity to present these standards today and interact with all of you. I sincerely appreciate all the members staying right through the 1.5 hours of the presentation. So sincerely, thank you for your participation. Over to you, Chairman.
Thank you, sir. Sir, we gratitude for your valuable inputs to us with a lucid explanation, sir. It is very useful to our members, sir. Now the floor is open for discussion. Members can unmute themselves and raise questions.
Sir.
Yeah.
Sir, I'm Ramamurthy from Madurai, sir. நல்லா இருக்கேன் சார்.
சொல்லுங்க சார்.
ரொம்ப நல்லா இருக்கு சார். வெரி எக்ஸலண்ட் பிரசன்டேஷன். எஸ்பெஷலி இந்த பெர்வாசிவ்ங்கிறது வந்து ஒரு புது இதுவே கொடுத்து எங்களுக்கு நிறைய இன்புட் கொடுத்தீங்க. நல்ல பெர்மிட்டேஷன் காம்பினேஷன்லாம் சொல்லி இது பண்ணீங்க சார். I'm having some 2 questions, sir. Then a small request to you, sir.
சொல்லுங்க.
இப்போ இந்த நான் கார்ப்பரேட் என்டிட்டிஸ்க்கு இப்போ அக்கவுண்டிங் ஸ்டாண்டர்ட் மேண்டேட்டரியா கொண்டு வந்திருக்கீங்க சார்.
எப்பவுமே மேண்டேட்டரி சார்.
இல்ல இந்த 1/4/2021 முடிக்க போறோம் இல்லையா?
சரி, நீங்க சொல்லுங்க, நான் ரெஸ்பாண்ட் பண்றேன்.
Most of the non-corporate entities are appointing auditors only for doing tax audit, sir. I am telling majority.
Correct.
Even if they are having huge borrowings with the bank is also not asking that a specific audit report stipulated by Reserve Bank of India, and the client is also not insisting. So we are giving a report in Form 3CB and 3CD. And we are commenting about the application of ICDS and how ICDS has been applied or violated, etc., sir. But under the standards on auditing, how far it is mandatorily applicable to the auditee? I am asking this question from auditor's perspective also.
Yeah. Okay.
Our institute is saying that we have to follow. How to present, especially in case a particular standard is not complied by the partnership firm?
Sure. I'll respond, sir. Basically, 2 situations. One is where you are preparing financial statements for issuing an audit opinion by applying the account audit standards, and you're issuing an opinion as per SA 700. Those cases, as an auditor, you can give an opinion only if those financial statements are as per accounting standards prescribed by Institute for Non-Company Entities. Now, tax audit, you are not giving for many clients. You don't give an audit report as per SA 700. You are giving those reports or formats which are prescribed under the income tax law. If you look at the guidance note on tax audit issued by our institute, 2014 guidance note. In that guidance note, it provides, even for issuing the tax audit related reports, it is mandatory for the auditor to ensure compliance with the accounting standards. So if it is not as per accounting standards, you are required to highlight the same. That's a specific requirement in the guidance note. Now, as far as the SSCs are concerned, avangala portha varaikkum namma da work pandrom. So namma prepare panni kudutachi. But the SSCs should understand that the financial statements are attested by them. And the financial statements as a specific paragraph that you are preparing as per accounting standards issued by the institute. So it is incumbent on the SSC to know that he has to comply with the standards. In this direction, now what has happened is, last week, the ministry has now amended the LLP law. Earlier, accounting standards was mandatory for companies under the Companies Act. But now LLP law is amended now, and they've introduced a section which will get notified maybe next year, that for LLPs, they have to follow the accounting standards in the preparation of financial statements. So that is coming for LLPs. It is a matter of time before other legislations, let's say Societies Act or the Cooperative Societies Act or Trust Act, also bring in the suitable provisions. So until those amendments happen, for these non-company entities, when the auditor is issuing an opinion, it is his responsibility to ensure that the relevant accounting standards have been complied with. One situation, as I told you, is where you're issuing an audit opinion as per SA 700. Namma chinna case tax audit case, most cases we don't give that. But if you're giving only the tax audit related certificates, those cases guidance note requires the auditor to ensure that they have been followed with. So that's the position from the institute, sir.
Okay, sir. Then, the language and users helpful reporting. Experience share request client IndAS first day we prepared the financial statements under IndAS. Notes on accounts just one day before the board meeting in which the accounts are to be adopted, and the directors recommend send the IndAS, especially recognition of financial statements, impairment, then valuation of financial and non-financial assets. அவங்க கேட்டது தப்பு இல்ல, எனக்கே அது அர்த்தம் ரொம்ப ரொம்ப கஷ்டப்பட்டேன், ஆடிட் பார்த்தோட கஷ்டப்பட்டேன்.
தப்பா நினைச்சுக்காதுங்க. I'll make this observation.
எனக்கு என்ன ஒரு ரிக்வெஸ்ட் கேட்டா, நீங்க நல்ல புக் எல்லாம் எழுதிருக்கீங்க, அக்கௌண்டிங் ஸ்டாண்டர்ட் புக் எல்லாம் படிச்சுதான் நாங்களே என்னன்னு தெரிஞ்சுக்கிட்டோம். நீங்க ஒரு சிம்பிளா இப்ப இன்னொரு டவுட் எனக்கு என்ன கேட்டா, நோட்ஸ் ஆன் அக்கௌண்ட்ஸ் அவ்வளவு காம்ப்ளிகேட்டட் லாங்குவேஜ்ல கொடுக்கணுமா அப்படின்னு எனக்கு ஒரு டவுட் இருக்கு. இப்ப நானே சிம்பிளா கொடுக்கலாம்னு நினைச்சாலும் அதனால ஏதாவது ப்ராப்ளம் வருமோன்னு சொல்லி கட் பேஸ்ட் காப்பியில போயிட்டே இருக்கும். நான் பிராங்கா உங்கள்கிட்ட டிஸ்கஸ் பண்றேன்.
இல்ல, I appreciate that. I'll just make 2-3 observations, sir. In fact, at the institute, there are 2 very small publications which I would encourage the board of directors, etc. to read. 60 பக்கம் தான் இருக்கும், A4 sheetல 60 பக்கம் தான் இருக்கும். வெப்சைட்லயே இருக்கு. And I would request Manimegle or DC, if you go to ASB website, இப்போ as we speak, if you go also, publications இருக்கும், அதுக்குள்ள IndAS இருக்கும், அங்கேயே இருக்கும் அந்த overview இருக்கும், quick referencer இருக்கும். அந்த லிங்க் காப்பி பேஸ்ட் பண்ணி chat boxல போட்டுருங்க, everybody can see it. Those short publications are there, sir. Effective A4 பேஜ்ல 60 பக்கம் கூட வராது. For all the IndAS அவ்வளவு சின்ன புக் போட்டிருக்கு, இன்ஸ்டிடியூட்லயே போட்டிருக்கு. செகண்ட் திங், we have the digital learning hub where every standardக்கு 20 நிமிஷம் வீடியோ, ஒரு ஸ்டாண்டர்டுக்கு 20 நிமிஷம் தான். In 20 minutes whole standard is explained. அதுவும் போட்டிருக்கு. That is the second thing. Now coming to the directors, etc., sir, I don't want them to mistake, but I think somewhere அது ஒரு கரெக்ஷன் வரணும். IndAS is applicable for entities where there is public interest, 250 crore net worth and above, and the mari or reasonable size companies. When somebody is occupying the office of director of that company, avarukku current non-current assets theriyalena director irukradhukku okara kodadu. Avarukku impairment vaartha puriyalena he should not take directorship. Even if he's an engineer, I'm repeating, even if he's an engineer. For example, இப்ப நான் ஆடிட் பண்றேன், எனக்கு கெமிக்கல் இன்ஜினியரிங் இண்டஸ்ட்ரி எனக்கு தெரியாது, ரப்பர் இண்டஸ்ட்ரி எனக்கு தெரியாது. பட் நான் அந்த ப்ராசஸ் கத்துக்கல, அந்த வார்த்தைகள் நான் கத்துக்கலனா, can I do an audit of that chemical engineering industry? என்னால பண்ண முடியாது இல்லையா? I can't do it. As a board of director, அந்த director's responsibility statementல 4 paragraph இருக்கு. ரெஸ்பான்சிபிலிட்டி ஸ்டேட்மெண்ட் பெரிய ஸ்டேட்மெண்ட்ஸ், பெரிய விஷயம். கண்ணு மூடி டைரக்டர் அது படிக்காமையே கையெழுத்து போடுறாங்க. My fear is why somebody should become a director without knowing what it is. So he says that going concern, company தாங்கோ, அது ஒரு காமன் சென்ஸ், he should know. அது டைரக்டர் ரெஸ்பான்சிபிலிட்டி ஸ்டேட்மெண்ட். அவ்வளோ பெரிய ஸ்டேட்மெண்ட் கொடுக்குறோமே, நான் எனக்கு புரிஞ்சதா அது கோயிங் கன்சர்னா, அந்த அளவுக்கு அவர் புரிஞ்சுக்கலன்னா அங்கே போகக்கூடாது. I'm not saying you should be financially literate, but he should have wisdom to be there. Just like as an auditor, எனக்கு கொஞ்சம் மேனுஃபேக்சரிங் தெரியணும், எனக்கு கொஞ்சம் இன்ஜினியரிங் தெரியணும். அது தெரியாம என்னால ஆடிட்டே பண்ண முடியாது. எனக்கு அந்த டெக்னிக்கல் டேர்ம்ஸ் தெரியாதுன்னா, இன்வென்டரி வேல்யூவேஷன் எனக்கு தெரியாதுன்னு நான் கை தூக்க முடியாது இல்லையா? நான் கத்துக்கணும் அது. ஸோ when it comes to a director position, he should understand going concern கம்பெனி ஒரு 12 மாசம் தாங்குமா எனக்கு புரியணும். Similarly, applied the relevant accounting policy. அந்த basic understanding வேணும் சார். அது ஒரு பாயிண்ட். The second point I would like to mention is, நீங்க பண்றது கரெக்ட் வேலை. That is, you should, when you copy accounting policies, you should follow the technical language as it is, because ஒரு வேர்டுக்கும் மீனிங் உண்டு. Many people அந்த சிம்பிள் லாங்குவேஜ்ல எழுதணும்னு பார்த்துட்டு மீனிங் மாறி போயிடுது. Tomorrow they will end up with legal complications. So I would strongly encourage that the technical language should come. Third thing, what I would recommend, sir, is that I've seen in many companies, and the transaction irukadu, but accounting policy reportruva. That is where the directors get confused. For example, or chinna example thara, financial instruments, fair value through OCI. அவனுக்கு அந்த பேலன்ஸ் ஷீட்ல இருக்கவே இருக்காது, அவங்களுக்கு அந்த இன்வெஸ்ட்மெண்ட்டே கிடையாது. பட் அவனுக்கு அது நீங்க பேலன்ஸ் ஷீட்ல கொண்டாந்து வச்சுக்கோங்களேன், அவங்களுக்கு என்னடா ஃபினான்ஷியல் இன்ஸ்ட்ருமெண்ட் என்னது, நம்ம பேலன்ஸ் ஷீட்ல எங்கேயும் காணுமேனு. ஸோ when we do copy paste from some other company, அப்படி லாக் ஸ்டாக் பேரல் எடுத்துடுறோம். பட் சப்போஸ் அவனுக்கு நிஜமாவே ஃபினான்ஷியல் இன்ஸ்ட்ருமெண்ட் பேலன்ஸ் ஷீட்ல இருந்தது வச்சுக்கோங்களேன், தென் he will definitely understand, ஓகே நமக்கு இன்வெஸ்ட்மெண்ட்ஸ் இருக்கு, நான் வாங்கி விற்கிறதா இருந்தா அது ஃபேர் வேல்யூ த்ரூ P&L. இல்ல நான் வாங்கி விற்கல, ஐ எம் ஹோல்டிங் இட் ஒன்லி ஃபார் சேல். ஸோ தோஸ் கேசஸ் இட் இஸ் அதர் காம்பரன்ஸ். அந்த ஒரு அண்டர்ஸ்டாண்டிங் வரும். அண்ட் சிமிலர்லி ஆஸ் அ டைரக்டர் ஆல்சோ அந்த P&L இருக்கு இல்லையா, அதுல மெயின் P&L இருக்கு, அதர் காம்பரன்சிவ் இன்கம் இருக்கு. அது ஒரு ஓரியன்டேஷன் ப்ரோக்ராம் they have to go through. அது அந்த ஆக்சுவல் கெயின்ஸ் ஆர் லாசஸ் ஓரளவுக்கு புரிஞ்சுக்கணும். ஸோ இஃப் யூ லுக் அட் தி போர்ட் ஆஃப் டைரக்டர் 7 பேர் இருந்தாங்க வச்சுக்கோங்க சார், 7 பேருக்கு ஃபுல்லா தெரிய வேண்டாம். பட் அந்த ஆடிட் கமிட்டி 3 பேர் இருக்கா இல்லையா, அவளுக்கு தெரிஞ்சிருக்கணும், எம்டிக்கு தெரிஞ்சிருக்கணும், த சேர்மன் ஆஃப் த கம்பெனி தெரிஞ்சிருக்கணும். த நான் டெக்னிக்கல் டைரக்டர் இருப்பாங்களே, அவங்க கொஞ்சம் சார் அவங்களுக்கெல்லாம் புரிஞ்ச மாதிரி இருக்கு, ஸோ ஐ கேன் டேக் அ ஜட்மெண்ட் பேஸ்ட் ஆன் தட். அவர் அந்த மாதிரி செட் ஆயிட்டு ப்ரொசீட் பண்ணணும். ஃபார் எக்ஸாம்பிள், ஐ ஆர் ஆன் போர்ட் ஆஃப் சம் கம்பெனிஸ், ரொம்ப இன்ஜினியரிங்கா டெக்னிக்கலா போயிட்டாங்க வச்சுக்கோங்க, நம்ம என்ன பண்ணுவோம், நான் மண்டை போட்டு புரிஞ்சுக்கிறது, ஐ வில் நாட் ட்ரை டு அண்டர்ஸ்டாண்ட். The subject matter experts அவங்களுக்கு புரிஞ்சதே இல்லையா, நான் ஒரு ஜட்ஜ்மெண்ட்ல வந்துட்டு then I go forward. So I think those processes have to be followed. I don't think people should make casual remarks about the financial system. They should understand that somebody is putting money, 250 கோடி net worth sir. அப்படின்னா என்ன, பேங்க் liabilities இன்னொரு 300 கோடி இருக்குமா debt equity ratioல, outside liabilities இன்னொரு 200 கோடி current liabilities அது இருக்கும். Typically total outside liabilities net worth 3:1, which means 250 கோடி இன்னொரு 500 கோடி, அவ்வளோ 750 கோடி சைஸ் கம்பெனி. அல்ல ஒரு டைரக்டரா இருக்கும்போது கொஞ்சம் அந்த அண்டர்ஸ்டாண்டிங் இருக்கணும். யூசர்ஸ்க்கு அது தேவை.
இந்தியஸ் அப்ளிகபிலிட்டி பத்தி அவங்க क्वेश्चन பண்ணல, அது ஒரு சிம்பிள் லாங்குவேஜ்ல எழுதிக்கலாம். ஏன் இப்படி நோட்ஸ் ஆன் அக்கவுண்ட்ஸ் எழுதுறீங்கங்கறது அவங்க கமெண்ட்.
சார் ஓகே that's a point. Let me answer. No, very beautiful point. I want to answer that. And there is a paragraph in the standard itself. The financial statements are meant for people who have a reasonable knowledge of financial statements. எனக்கு அந்த ஒரு ரீசனபிள் நாலேஜ் இல்லைன்னு வச்சுக்கோங்களேன், எனக்கு இட்ஸ் நாட் மென்ட் ஃபார் மீ. ஃபார் எக்ஸாம்பிள், இப்போ நம்ம இந்த மெடிக்கல் ரிப்போர்ட் இருக்கு சார், இந்த இசிஜி டயக்ராம் இருக்கு, அந்த மாதிரி நிறைய மெடிக்கல் ரிப்போர்ட்ஸ் எல்லாம் வரும். பாதி நமக்கு புரியாது, அது இந்த பிளட் சுகர் ரிப்போர்ட் அதெல்லாம் எடுப்பாங்க, நமக்கு என்னன்னு தெரியாது. இப்ப எது கொடுத்தாலும் ஒரு ஸ்கேன் சென்டர் போயிட்டு வர வேண்டியதா இருக்கு, அது ஒரு 10 பேஜ் ஃபைல்ல போட்டு கொடுத்துருவோம், ஒண்ணுமே புரியாது நமக்கு. பட் இட் இஸ் நாட் மென்ட் ஃபார் மீ டு அண்டர்ஸ்டாண்ட், இட்ஸ் மென்ட் ஃபார் தி டாக்டர் டு அண்டர்ஸ்டாண்ட். இட்ஸ் நாட் மென்ட் ஃபார் வெரி காமன் மேன் டு அண்டர்ஸ்டாண்ட். ஸோ நான் முயற்சி பண்ணி புரிஞ்சுக்கலாம், பட் இட்ஸ் ஃபார் தெம். ஸோ இந்த கேஸ் ஆஃப் தி இண்டியஸ் அந்த லாங்குவேஜ் எல்லாம் என்ன தெரியுமா சார், we can simplify it, but the problem sometimes when you simplify it is it may not tightly capture the essence. அதனால அந்த வேர்டிங்ஸ் அப்படி வர வேண்டியதா இருக்கு. If you write very simple வச்சன எழுதிட்டு போயிட்டு வச்சுக்கோங்களேன், அந்த கன்சைஸ்னஸ் போயிட்டு it will become too long. then again the purpose is lost. I just want to give you one interesting development for the future. Most likely from April 23 varum. From April 23, most likely to come. Internationally over, India it's pending. Accounting policies, if you are following what is there in the standard, no need to give in notes to accounts. I'm repeating. If you are following exactly what is there in the standard, no need to give accounting policies, which means in the accounting policies goes into 4 pages now. Future it will become half a page. That half a page enge varunaka, wherever you have a choice of accounting policy, ange mattu which choice you made kudukunu. For example, choice inventory lower of cost choice. Where is the question of choice? So why should I give a paragraph on accounting policy? Similarly, financial instruments, the standard tells this is how you have to classify. Choice. So those policies I need not to give. Property, plant, equipment. I can either follow cost model or revaluation model. So those cases, I should give a policy that I have chosen cost model. I have chosen revaluation model. So that is the proposed amendment exactly for the reason which you told. But that annual report policies. So who can understand it? Somebody who knows India's policy. So that is the drawback of that. But I think internationally we have all gone in that direction now. So that will probably address your question, but it has its own drawbacks also.
Board of directors, prepare they are comfortable than India is profit and loss account because they are afraid of seeing comprehensive income and other things.
But they should somewhere understand, sir, because qualitatively the profit figure in India is a better figure than in AS. For example, in the actual gains or loss, in AS, it goes to P&L. In Indias, it goes to comprehensive income. The logic of Indias is profits which get realized come in P&L. Those which are unrealized, value adjustments, they come in other comprehensive income. So the user will know in the profits are realized or realizable. Other is valuation level of profit or loss, other comprehensive income. And for Indias, mostly from 1/4/23, the P&L format itself is changing. It will be similar to cash flow statement, where your P&L operating activity income, profit, investing, others. And bifurcation. So that will come from 1/4/23 or 1/4/24. But that's a development of it. So I think this when change comes, sir, people also have to move towards change. My request, situation personally myself, or I can request other speakers to come and do a 1-hour program or a Q&A for those board of directors. We can even do it free of cost. I can ask somebody to come and do. Because as an institute, it is our responsibility to educate all stakeholders. And DC Talayatitruka, which means he's agreeing to take that responsibility of coordinating and getting the speaker to do it.
Okay. Thank you, sir. Thank you very much.
But let's do it in the interest of the overall profession development. It is quick change observation. The change is for the good. So on the good namlo explain panano. But explain pandar sometimes and wipe venu. So because now I can put it in media here and there, but it won't help. But or face-to-face interaction, maybe they'll conjun doubts pedo. 10 doubt in the 7 doubt pedo. 3 innu irukom, but 7 remove aido. Na sonna 5 remove avum, DC sonna unno 2 pedo. So unnu baaki 3 irukom. Adu okay irukattum paravalla. Abdi poite iruknu. We should keep progressing in life.
So then one more small question. From auditor's perspective, disclaimer of opinion or qualified opinion, which will be comfortable for him?
Sir, choice sir. Choice
Okay.
Disclaimer comes only when there is inadequate evidence and pervasive.
Okay.
All other cases, it's either qualified or adverse. The comfort factor, sir. The PVR nalla irukara, sir.
Sir. Fine.
State is controlled by Madurai now.
Yes, sir.
Or decide பண்றாரு செலவு பண்றதா வேண்டாமா எதுல செலவு பண்ணணும் கோயிலுக்கு பண்ணணுமா கூட யோசிக்கிறாரு.
Thank you, sir. Thank you very much.
Sir, உங்களுடைய
சொல்லுங்க
சார் உங்க 2,60,000 அனுப்பிச்சு விட்டுருங்க சார்.
எதுரா
உங்க 2,60,000 டியூ டு தி ஸ்டேட்.
என்னடா டியூ இருக்கு?
தமிழ்நாடு கவர்மெண்ட்
இல்ல இட்ஸ் ஓகே. அப்படி பார்த்தா யூஎஸ்ல பர் சிட்டிசன் லைபிலிட்டி இஸ் much bigger. So
but it's a welcome step, sir, so that people know where the state stands today and how they have to actually
no, I don't agree. It's not the people's responsibility. It is the state's responsibility to generate adequate economic activity to reduce that debt. It is not the people's responsibility. No,
not responsible for people to know where the state
why should I
stands.
know? I should know what I have to do. By telling me, you're telling that as if it's my responsibility. No, it's the state's responsibility to manage their fiscal better and for them to generate adequate income to close all those liabilities. That's state responsibility. இப்போ due respects இப்போ இருக்கோம் இல்லையா, நம்ம கண்ணு முன்னாடி we know southல there are a couple of other cities who have grown much bigger. கண்ணு முன்னாடி we were miles ahead. நம்ம கண்ணு முன்னாடி அது ரெண்டு டெவலப் ஆச்சு. அதெல்லாம் தப்பு இல்லையா விட்டது. So state has a responsibility. We should do that. While I agree, நல்லா இருக்கு மீடியாக்கு நல்லா இருக்கு, but state should take responsibility of generating GDP, improving GDP.
Any other questions?
ஏண்டா தலையாட்டின சும்மா அது கரெக்டா இல்லையா சொல்லு. சும்மா
சார் கரெக்ட் தாங்க சார். நீங்க தலையாட்டினத ஆட வெட்டிறீங்களே.
சரி, okay. Pleasure interacting with all and apologies for that additional side conversations.
Thank you, sir, for your sharing of rich knowledge on the subject, sir. With gratitude on patient's reply, sir. Now I request the secretary to give vote of thanks.
Good evening, members. On behalf of Madurai branch of SIRC of ICI, I thank our chief guest of the day, Chairman of SIRC of ICI, respected CA.K. Jalapathy sir, for joining us today in spite of his busy schedule. I thank our today's speaker, respected CA MP Vijay Kumar sir, for accepting our request to address our members on the topic being sensitive to audit reporting standards for corporates and non-corporates. Thank you very much, sir, for your detailed session and for sharing a very elaborate background material, which will help us on the practical aspects. Also, I thank you very much for your patient answering of our members' queries. A special thanks to you, sir, for offering us a special session to directors. We make note of it and use the same, sir. Thank you very much. I would like to thank our beloved ex officio member, immediate past chairman of SIRC, CADC Jain sir, for your constant support to Madurai branch. I also thank our chairman, CA Mohanasundram sir, and the managing committee members for your support. My sincere thanks to Madurai branch members for your encouraging participation on a weekday. I once again thank you, respected speaker, CA MPV sir, for your valuable session. Thank you all. Thank you, members.
Thank you all. Bye.
Thank you, sir. Now the meeting is adjourned. Thank you.
Bye. Thank you.